Yo, freelancer finance is back.
All right, and the day we come back, we have interest rates to look forward to. What the hell
Yeah.
happened?
Yeah, J Powell. I thought you were gonna,
Come on,
hook us up,
man.
man. Well, stocks are doing well today, but interest rates are going up a quarter of a point. But I mean,
I
is
kind of would
that
have just wanted him to say the half and be done with it. Then
yeah,
we have
just
like
say
another
half.
week of blood, and then
Well, I don't consider this the end of the world. If he said it was like 12% or 10%, then maybe it's the end of the world, right?
we'd be selling everything. I mean, we would be. I'd be
I
selling.
mean, that's a different world, but if you're talking about 2 or 3%, I really don't get it. I don't get why everybody's running to bonds. Okay, so let's go to Jay Powell. Before we go, obviously we have a Discord. You guys should join it. It's free for the main thing. We have a Patreon. We hope you join it. It's like only $1 still. We're going to be raising that soon, so we're letting everybody know. But
Everything's
still,
going up. It's inflation. We have
inflation.
supply chain issues. We have to deal with.
Freelancer finance, supply chain issues.
I wonder if you could detail your thinking a little bit about how you're considering the risks of going too fast and potentially tipping the economy into recession, and how you're weighing those risks against the possibility of going too slowly, allowing inflation to become embedded and kind of getting behind the curve.
So I guess I would start by saying that, in my view, the probability of a recession within the next year is not particularly elevated. And why do I say that? Aggregate demand is currently strong, and most forecasters expect it to remain so. If you look at the labor market, also very strong. Conditions are tight, and payroll job growth is continuing at very high levels. Household and business balance sheets are strong. And so all signs are that this is a strong economy, indeed one that will be able to flourish, not to say withstand, but certainly flourish as well, in the face of less accommodative monetary policy. So I guess that's how I would say I'm looking at that. Of course, the objective is to achieve price stability while also sustaining a strong labor market, and that is our overall objective. But we do feel the economy is very strong and well positioned to withstand tighter monetary policy.
Didn't he say inflation was transitory? Are we supposed to believe him at all at this point?
I don't. I don't believe everything he says. I'm just looking at what he does.
He did sound like he did believe that statement. We'll see what happens, but he thinks the
Oh,
economy
we
is
analyzing his
very
body
strong.
language? You want to analyze his body language?
Oh,
man?
yeah, he did
He's
look down
lying?
there.
Are you
He did
lying to
look-
me?
Oh, look at that! Look at that! He's not reading notes.
He looked down. He's not reading. He's lying. No.
Okay, so let's go back to maybe a couple more questions.
Hi, Chair Powell. I was wondering,
the
in
GDP.
the steps, you have quite a markdown to GDP from 4 to 2.8%. I'm wondering, how much of that do you feel is a result of the Fed's stiffer than expected action here? We talk about monetary policy operating with a lag, but is this going to bite quicker than expected?
I don't think that's a big piece of it, actually. I think some of that is just an early assessment of the effects of spillovers from the war in Eastern Europe, which will hit our economy through a number of channels, highly uncertain. But you're looking at higher oil prices, higher commodity prices. It'll be so that we think that will weigh on GP to some extent. So that's part of what moved those assessments down. I think generally monetary policy works with a lag, so some of that would also be in there. But remember as well that 2.8% is still very strong growth. If we think that the potential growth rate of the economy is somewhere around 1.75%, 2.8% is strong economic growth. It would have been one of the strongest years, in fact, of the last expansion. So while it's lower than last year's 5.8%, it's still quite strong growth. So I would say it's quite a strong forecast.
Usually, like you said, 1 to 2%. Last year was around. I think he said
We
5.
were in a negative, right? We were in a negative, so
We had to catch up.
It was getting back some of what we lost, and then growth on top of that. So I don't know how much of that was getting back, like where the 0 point was, but still 2.8% growth in a year under these conditions is pretty good. That's pretty bullish. And that's something that he can't lie about that. He must believe that because he's enacting the plans that he's enacting. So you can ignore everything else he says and just look at what he's doing. And that is a bullish signal to me. If he is okay with announcing the rate hikes, not triggering a recession, and making that prediction of a 2.8% GDP growth, those are actual things that he's saying and doing that are in stone. I can take him at that face value. You can't lie about that stuff.
Well, if you're taking that at face value, he's actually telling you at the end of the year, the economy, the real economy, is going to do better than you think because everybody's planning for a recession and they're acting like it's there. So if it doesn't come, we have another boom happening, I think, towards the end of the year.
Yes, and this is what I'm building towards. I mean, this is part of the strategy is to capitalize on that.
That means you have to DCA now. It doesn't mean you wait till some sort of magical moment when it's at the bottom of the bottom of the bottom. It's literally at the bottom right now.
It's not about catching the bottom.
You're in a cave. You fell down a well in a cave, and then you fell down another well in the same cave, and you're like, you know what? There's one more fall coming.
I didn't say that. It's about waiting for the right time to move the money around.
All
That's
right.
that's really what it's about. It's not
Oh,
about anything
you're timing a
specific.
sell to a buy. That's what you're trying to
Exactly.
do.
So in other words, yes, it's making sure
Okay.
that I get the maximum, that I don't rush out of a trade to
Right.
rush into something else when I still think that we might see some lower prices. Or what I'm basically saying is everything is so low that even if I don't catch the bottom, I'm fine. I'm going to still get my 2 to 3x from here.
Right.
So I don't care. So all I really want to do is maximize the buy that I can and not rush into it now. You know what I mean?
Yeah, no, I do. I just have a slightly different investment philosophy where even today I bought and today it was up because I just looked at the valuation. So in our Discord for the Patreons, I do have my trades and Carlos has his trades. And today I spent 11,000 and change on Square. Where is it? Here you go. I did spend this. And so somebody asked, here Steven asked, hey Vital, I saw that Square jumped quite a bit for the last 2 days. And he's right. So
Yeah.
I am curious, what is your reasoning to be buying it now? And this is my reasoning. I buy when I actually have cash that I can spend, right?
Exactly.
And it's still down 60, 70.
Right.
This was at $300, by the way. So I know everyone's looking at this like, oh my God, you bought 10% more? Dude, it is down $200.
Dollars per share. Dollars per share.
Yes.
Yeah.
Or let's say $189 or whatever
Yeah.
it's down. It is down massively. This is what I get back to. I'm just DCAing like $100, $90. If it goes lower, $80. I'm really trying to build a massive position in Square and PayPal, like massive, way bigger than I thought I would do, because I never thought I would see these prices. You know
Right.
what I'm saying?
Right.
I thought it was always going to be above $200, so I had no idea it was going to go this low. So now I'm like, what can I do to just maximize the return? Because like, and all these distractions, like go row and lemonade and all these other things. I'm like, no, push it all aside because we have to focus in times like this, right?
Yes.
So I'm trying to focus and just pick my 4 or 5 winners, and we're gonna have another episode about those. But Square is one of them where I'm just trying to push as much cash into that. Because look, what happens if I, let's say, am able to dump 100 grand into Square, and then it just 2x's?
Well, at the end of it.
No, but I'm just saying, just the 2x,
yeah,
right?
just a 2x is 100.
That's a whole year's salary.
Yeah.
So all of
More.
a sudden,
in some parts of the country, that's more. That's definitely more than like the minimum wage. Yes, and that's something that Bob said in his last video, talking about like your exit point. He's saying at the end of the day, the only thing that really matters is the dollar amount that goes into your portfolio. A lot of times we get hung up on percentages, but a 2x of $100,000 will be more money in your portfolio than say, a 10x of $10,000. So it really does come down to how much actual cash are you walking away with at the end of the day, and what do you plan to do with it? So right, if you've got 100,000 and you can put it into Square right now, a 2x is a great return.
yeah, even if I have to wait the 2 years, like you're saying, it might not all play out perfectly.
Yeah.
But I mean, like $100,000, someone has to go to work for a very long time, 40, 50, 60 hours a week.
Right.
For how many weeks? 50 weeks, 48
52
weeks,
weeks,
a
right.
couple of weeks of vacation.
That basically
I'm
buys you
just saying
a year
it's
on
insane.
Discord.
It buys me a year, but this is my point. So I am focusing on these few companies because I think I have easy doubles. I'm not aiming for the 10x here. I got Enphase, I got Tesla. I think they're going to do just fine, right? Let Square just do a double for me, and I will be super happy.
I did want to discuss something. This is something that we would normally do for like that morning brew thing, and I just want to share this and see, because this is where I think we're getting too certain. So I want to bring this up again. We do talk about this a lot on the channel. It's the 10th man principle. Okay.
Well, what's too certain? What do you mean? That it's going to eventually
I think
recover?
Yes, I think that we're getting a little too certain. They're like, okay, now the Fed has said this. These valuations can't stay this way. Meta can't possibly be at the price it is for another 2 years. We start feeling a little.
Oh,
too
I'm not
certain
saying
about
that. I'm not saying 2 years. I'm saying let's look at 5 years even. Let's look at 10 years.
Mm-hmm.
I think these prices are ludicrous.
I agree.
You have to wait. I'm not saying you don't have to wait.
I agree. I'm just saying we might be 2 out of this imaginary 10-person pool of people, and we could all be wrong. We've referenced this a bunch of times on the channel, this 10th man principle, that if there's 10 people in a room and 9 of them agree, it's the duty of that 10th person to assume that the other 9 are wrong. And that's essentially what this principle is. I first heard about it in World War Z. They actually talk about a reference to it here. The 10th man rule is a method used by Israeli intelligence after they failed to take threats seriously on several occasions. The learning curve is best known by the Yom Kippur War of 1973. As a result, when they received a bizarre message warning about the undead, a council of 10 debated the issue in different ways. So this was in the movie. If 9 of us who get the same information arrived at the same conclusion, it's the duty of the 10th man to disagree. No matter how improbable it may seem, the 10th man has to start thinking about the assumption that the other 9 are wrong. And so that's something that I've been trying to keep in mind lately. I'm only accounting for like 2 or 3 different options of what could happen. in the future saying, oh, the Fed's rates are going to be this, it's going to be that, whatever it is. The reality is the Fed could have announced what they're going to announce. Stocks and crypto could still trade at what they're trading for over a year or even 2 years. We just don't know. There's other factors at play like the war, and we don't know what could happen again, right? We didn't see this war coming. How do we know that there's not another negative catalyst? We have an election year.
There's always a negative catalyst. In fact, if you look at, and I posted this somewhere in our Discord, if you look at the wars, that how long it took to recover.
Right, it's like 50 something days average.
Generally, it's like a month or two.
Yeah.
The stock market starts to recover, if not fully recovered, basically. So wars have never really negatively affected the stock market for too long. Yeah, I think it was 9/11 that lasted 6 months where it took a while to recover. But even 6 months is ridiculous.
It wouldn't even be Christmas.
No, but it would
Christmas
hurt.
be over.
Obviously, it hurts to be down for 6 months. I'm not saying it's easy mentally. But if you think about it in the grand scheme of life, 6 months means nothing to be down in terms of the stock market. That if we're planning to actually stay invested for 5 to 10 years, like we keep talking about,
Right.
unless we're all out in 6 months, which we're not,
Yeah.
obviously, at this point. At this point, we have to be all in, right? At this
Yeah.
point. I think we can wait the 6 months. We can wait the year. I think the prices, I hope they stay lower. I know I'm going against the grain of some of these people in the Discord, but why do I want Enphase to go to 300 now? I'm selling at 1,000.
Yeah.
I want Enphase at 100, okay? I want it at 80. I'm sorry for everybody watching this, but that's where I want the stocks that I really believe in lower. I want Tesla at 500. And I've been waiting and waiting patiently. I've been slowly buying, but I've been waiting for my big, get rid of all my dividends, get rid of all of those things.
Right.
Go all in Tesla and Enphase, just drop it all in. But if it never comes, look, it never comes. I'm still there. But I wouldn't be upset if I got that opportunity. I don't know. Would you be upset if you got that opportunity? Tesla at 500?
No, I mean, that's what I'm mentally preparing myself for. That's what I'm saying here is like me, I could be guilty of saying, oh, as soon as we get word from the Fed, we might have a little bit of chop for a week or two and then it's off to the races. I'm preparing myself that that's not the case. Yeah, I'm trying to 10th man myself and at least prepare myself for it because I've been caught off guard a couple times on both sides, right? Where you don't sell and you should have, when you don't buy when you should have. And so I'm preparing myself for like 6 months, even a year of chop. And what that means is just the consolidation into the positions that I feel I have no problem holding for years, because what that gives me an opportunity is to build a much bigger position than I could, because you have to earn the money. I can't buy the position that I would love in each of these companies tomorrow, but if given enough time and planning, I could. And that's part of the reason why seeing crypto be so resilient is making me feel like, well, I mean, what we were really looking for from this point is roughly a 2x in crypto. Are there potential 2 or 3x's out there right now? And being conservative, that's just if it gets back to the price it was before everything started tanking. That's not even considering any future growth. That's just from here, is there anything that's 60, 70% down that I really want? Does it make sense to move some of that crypto?
Well, in the stock market, right. So I already said that I'm selling some crypto. I don't mind to go into the beaten down stocks like Square and PayPal, etc. Let me be clear. I'm not buying Lemonade, okay, right now.
Sorry, Joe.
Lemonade sorry, Joe. It has to go way further down. And the reason it does is because Square and PayPal and Facebook and Google and Amazon, they're going down. And they're just better companies, let's face it, okay? They're not going to give me the 10x, but I don't mind a double or a triple when you're putting a lot of money into the stock.
Well, right now, like I said, I've been building a cash position and I'm looking at certain price targets in crypto to pull some of this money out and move it on over into the stock market, most heavily going into Tesla. Some will make it into Enphase. Some's going to go into Spotify. Those are really like the 3 core positions, at least right now, until I get what I want out of those positions. I'm not really looking at any of the spec plays. I have good positions in a lot of these spec plays that I bought way higher than what they are right now. Things like Virgin Galactic. I'm just sitting on that now, waiting for something to happen on the Starship front for that to pop. But am I jumping into that now? No, I might throw a little bit in because it's so beaten down. It would just bring my average down. My goal is to make as few trades as possible this year and have them be mostly buys. 1 or 2 big sales and mostly buys for the rest of the year. And so far I'm on track. I've done a little bit of buying, but now I think it's time. It's been beaten down so much and crypto's so resilient. I think it's time to pull some of that profit down.
Yeah, anyone who's pulling out of the stock market to sit on the sidelines, even now, like you should have done it 6 months ago. Like, I mean, I don't know why.
It was like the Ross Gerber when he was like, there was a video of him. I forgot what it was recently. I saw it on Stephen Mark Ryan's channel. He's like literally laughing. He's like, Tesla has 2 new factories coming out. They're raising prices. They're getting closer to level 4 autonomy, and you're selling your Tesla right now. It's just
And
the
you
deal of
had
the
your
decade.
chance. Like at $1,200, I think everyone and their mother knew that it was a little bit too high. Like me and you were talking about it.
Yeah.
I didn't sell any, and I'm glad I didn't. I don't
Yeah.
need to trade Tesla.
Yeah, I don't need to trade Tesla too.
That's like playing with fire. I'm not
I literally
interested.
see Tesla as a crypto on the stock market that you just don't want to mess with. You want to just hold it, have a price
You're going to
target,
miss the run. As soon as the run happens, you are going to miss it. I guarantee it. You won't be ready for it. You will think we have another quarter. And we've discussed all this for years and years. Like you always think you have another couple of weeks or a month, and then it just runs, and that's it. So my point is, you don't mess with that, especially now. Like even I have Lemonade and all these spec positions too. I still have a bunch of them. I have Palantir, which is down by more, I think 60% now.
FUV.
FUV is down. Oh my God, from 36 to like $6, $7. So everything is down. Who is selling right now? You must think the world is coming to an end. That's the only thing that you think is going to happen. And if a recession hits, I get it. But then you shouldn't be investing because you need the money for something else, right? You need that money for something else.
And you said it a couple of times. It's indiscriminate selling sometimes. It's not always like they targeting a specific company. And the other thing is, if you're over leveraged in the markets and you need that money, you have no choice but to pull it out. So I would say some of that is at play. All of the sales that are happening aren't people that just suddenly don't believe in FUV.
Right, they have no
had it
choice.
at 36. They have no choice. They were either over leveraged or they might see a deal somewhere else. That's another part of what's happening right now. It's sort of like that cyclical movement of money that goes from growth to value at the end of the summer when you see like the banks and stuff getting beaten down, and then you see that money return as the school year starts again, except it's happening everywhere at the same time, indiscriminately. It's literally like there's landmines. I've been watching a lot of Alex Hormozi lately, and one of the things that stuck with me, he's like the voice of my 10th man. He says things that make so much sense to me theoretically, but it's hard for me to put in practice. And so now I'm actually trying to follow what his advice would be. And one of the things that he said in a recent video is this idea that a lot of people try to attain wealth by reducing their liabilities, which is not a bad thing to do. Reduce your bills, try to get your bills as low as possible. But he says if you focus too much on that, you miss out on opportunities to 30 or 100x your money, which would make all of the work that you're doing to reduce your liabilities sort of moot anyway. And so I've been trying to focus more on that. And that's one of the reasons why I have a certain price point for Bitcoin, in which case I'm going to start selling some of this and start moving this into companies that I do think will 2, 3, 4, 5x, which is not something that I would have done a few years ago. And so this is me trying to learn from a master. And again, this is not financial advice. This is just what I'm doing. But I do feel like it's time to take advice from someone who has clearly shown that they know what they're doing.
In my opinion, what happens is they start thinking in increments rather than in orders of magnitude. So let me explain. So it's majoring in the minors. It's thinking, how can I save 30% chunks rather than make 30 times more money? Right? And you talk to those people, they're going to make the argument like, well, no, I'm going to do both. It's like, no, you're not, because you're literally sacrificing everything that you have to just save 30% and I'll get to the big picture stuff in a minute. But the big wins are what drive your net worth, right? So you can spend all this time and attention obsessing about stuff, right? These little doodads to save 2% and 1%, whatever, that might end up getting unwound up later, and because it's probably swampland, it's probably not legit anyways. Or you could have just bought Bitcoin in 2014 and been done with it. The point is that the big wins, the very few big wins, are the things that are going to drive the net worth the most, not the tax shelters. And so people disproportionately allocate their attention towards these savings when that is not where the disproportionate amount of the net worth is going to come from. And so don't surround yourself with people who are obsessed with this stuff, because they're thinking in increments, not in orders of magnitude. They're not thinking, how can I 10x? They're thinking, how can I save 10%? And that, in my opinion, is the wrong way to go about building a fortune.
And if his advice doesn't instantly resonate with me, I'm saying to myself, it's because of the disconnect with where he is and where I am. This is the point where I have to learn instead of rejecting it. You know what I mean?
I think that's the point, that we're supposed to be learning how to become better investors. Even this channel, it's about that. We're learning just like everybody else here who's watching is learning, right? I've learned from all my past mistakes that you cannot get rid of your assets. That's always a mistake. If you're going to sell any assets like you're talking about, they have to go into other assets that will make you more money.
Yes.
So back to the original point when we were discussing in the beginning, who is selling their assets and sitting on the sidelines? Because there are a lot of people, besides just being over leveraged. I think a lot of people are scared, think they're going into a recession, think that selling out of their Tesla stock and their Enphase stock is probably the better thing to do, and to figure out while something happens. That's not the way this thing works. By the time you realize how this thing is going to work, it's already gone double.
Or it's 10, 15 years and you've wasted 10, 15 years of your investment career.
No, but you can't sit on the sidelines waiting for the world to be exactly perfect the way you think perfection happens.
Yeah.
It's just not going to work that way. So that's what I've learned. It took a long time to learn this little thing.
Yeah, and a lot of money.
I know I'm saying it like I'm passing it off like it's nothing, but this is to learn that you're not supposed to run away. You're not supposed to sell your assets unless you have some better asset to put into.
Yeah.
Holding cash is not the answer. Unless you have zero cash, okay? If you technically have no money at all and you're over leveraged,
you need some
cash. But I'm talking about the people who have a job, who can pay for their bills, who aren't worried about losing and going bankrupt. They're selling too. They're getting rid of their good assets to do what with? I don't know exactly what.
Right. Well, just to hold it. Just to hold.
To hold cash, that's not going to
right.
work out for you. It's not. You're never going to time this perfect bottom. That's what I keep getting at. Everybody's always like, why did you buy now? It's 10% more. It's 10% more. Dude, it's 70% down. It could be 10%
Yes,
more.
but the
It could be
10th man would
5%
say
more.
that it might not recover back to that 70%. And I think that's why people say, for example, like if you looked at Zoom as an example and you're like, oh my God, it's down, it was up 150%. Yeah, but how did it get to that 150%? That wasn't real, you know? So
I agree, but let's scale it back.
It's real value.
I agree, but let's scale it back. I'm talking about super profitable growth companies. I'm actually not discussing the Lemonades of the world. I'm discussing the PayPals and the Squares of the world who are actually making money, have a PE, are growing massively, have income, are not going bankrupt this year. Lemonade might run out of money, by the way. Okay.
A lot of these smaller companies.
Square is not running out of money. PayPal is not running out of money. They
But it
print
doesn't mean,
money
but that doesn't necessarily mean that the market's going to price them that way.
this year and next year. Yeah,
You know what I'm
possibly.
saying?
Who knows when?
Like the market doesn't always do what it's supposed. If it did, then like those everything money guys with their 8-pillar software, it would tell you in a printout, buy this company and it's a great buy and it's always going to work out. So those metrics are a guide, but unless the investment community also sees that and believes in the company, the stock's going to just sit there. This is about investor sentiment. A big reason why we started this channel, or at least why I wanted to, is because I said when I was talking to a lot of my investor friends or people that were invested in markets, there was a big disconnect in terms of education. People really do feel like you have to find the right time to buy because the stocks are always supposed to just go up from the point that you buy them. And that's what triggers a lot of this sell-off. So it's a bunch of miseducation. And that's one of the reasons why in talking with you, I felt like you were one of the few people that really understood market forces, and it made for better conversations than trying to tell somebody, oh, if your stock's down, don't put 5% stop losses on all your positions. You know what I mean?
Well, you hit the nail on the head that nobody knows how to invest because they all think as soon as they buy, it should be up 10%.
Every
and
day.
we even see it in our Discord. Like the stock is up today. Like, does that matter? Like, no, you're missing the point. Like, you should want it to go down. If you're a true believer in what you're investing in, you should want it to go down. You should want to get that company at a better price because then that's where you 10x your money. You don't 10x your money when it goes up every day.
Yeah.
I know that sounds like you do, but you didn't get a chance to build that position to change your whole life, right?
Right.
I remember when Tesla was tanking. That's when I've changed my life. When it was tanking, when it was going down to 175 and I was buying and I was scared.
Yeah.
I was actually really scared. And I was putting all my leftover cash into it, not knowing what would happen.
Yeah.
That's when you make real money. And that's also what we've learned. Like, that is the time. It's not the time when a year from now and everything is perfect and there's no wars. The Fed says we're going to be stuck at 2% now for 5 years. That is not the time to make money.
That's not the time for growth. That's the time to take some profits.
That's exactly right. When your mom is telling you it's safe now to get back into the market.
You're like, I'm out. And here's come visit me on my yacht.
No,
you're
but
not gonna retire. You're not going to retire, and you're not going to make the millions unless you have 2 or 3 positions in your portfolio that are up like thousands of percent.
Right.
That either takes timing it at a really good spot or time. One of the two.
Thanks for watching. Like and subscribe. Hit the bell. And we'll have more of this because you've seen the Fed chairman thing already. You don't need to hear more from us.
Let's discuss it on the Discord. Hop on the Discord. We'll be in there. We'll be chatting about it all day.
Yeah, J Powell is raising the rates. We're still going to have 6 more rate hikes this whole year. So expect a lot of chop.
Yeah.
But if J Powell is right, my final words is that I think we might end this year off better than we started. Let me put it this way.
Oh, yeah.